What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream here. Hope you all are doing great. We do have pre-market momentum, a little bit of a pullback right now after the very strong rally that we saw yesterday. Yesterday, we also had some comments from Jerome Powell. The markets, no doubt, we've already talked about it, discussed in our market updates videos and live streams, is certainly a little bit on the overextended side, yet a lot of stocks here keep pushing higher despite the hawkish tone from the Federal Reserve. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and the video is working well. Just give me a thumbs up and we should be all set. Google here dropping like hotcakes, down over 4.5% on potential news that Bard AI was not giving out accurate information in an ad. So they're down quite a bit, 4.5%. And Microsoft on this news right now pre-market is flat also, so it's not really moving all that much, but Google is definitely taking majority of that hit, down about 4.5% at the moment. So welcome on board. Thank you so much for joining. I appreciate it. Good morning, good evening, wherever you guys are watching from. I do have Squawk Box going on right now because they are talking about some stocks here. Jim Cramer definitely is on right now, but Enphase here up 8.5%. Fortinet up over 12.5% after the earnings reported last night. We do have Chipotle down over 4.5%. Uber is up a little bit over 7%, so pushing past $37.40. And then let's take a quick look at CVS and Wendy's as well. CVS right now pre-market is up over 2.6%, and Wendy's is pushing lower a little bit, about 1% at the moment. So I'm going to break down some of the earnings, especially Enphase. I'm excited to break those down. I did a video on Fortinet yesterday, so make sure that you do check that out. Vertex, we'll talk about that stock as well. They reported last night. Right now, pre-market, they're very, very flat. They're not really pushing higher or lower all that much, still down about 1.5%. We did get a beat on EPS, a small miss on revenue, and they did report for the entire fourth quarter. So we'll talk a little bit about the valuation for the company at the moment. So thank you so much for joining in. Let's see. Hope you're doing well, mate. Yep, Serena is doing great. Enphase, beast of a stock. Couldn't agree more. It's definitely been very, very strong. And Ernest says, Manchester Caddy, hope you're doing well. Yes, so Manchester, if you are tuning in from Manchester, you better support United, man. So yes, let's just do a quick poll here. Green or red markets today. Let's see. Let's see where the consensus is right now. Today should be a good consensus considering that we are expected to open just about flat here. And we'll see what the consensus is. So Morning Caddy, gotta be a green day. Tesla break over $200. Matthew's asking, well, Tesla, $200, big resistance there. We have gotten rejected there not once, not twice, but 3 times. At $199, close to $200. In pre-market right now, we're trading a little bit over $196. So it's possible that we get up to $199 and $200. It's possible that we get a retest up to that level, but a breakout, in my opinion, is going to be a little bit more difficult, more challenging for Tesla, considering that it's consistently making a little bit of a negative divergence, and we're starting to really slow down on that momentum. You can see the volume also coming down, right? So volume's been a little bit lower. So you're seeing a lot of divergences play out for Tesla, right? So not only is the RSI trending lower, it is overbought and it's trending lower. The price, the momentum itself is slowing down. We got a big resistance at 200. And of course, the volume is also decelerating a little bit. So it's possible, but definitely very low probability in my view. So before we jump into the earnings, I'm going to quickly go over some of the calls from today. CFRA downgrading Roku to sell. We got Piper Sandler reiterating Target as overweight. Cisco as a tactical outperform from Evercore. We got Apple getting that outperform rating from Evercore. Oppenheimer reiterates Lululemon as outperform. Walmart as a buy from Barclays. We got an upgrade from Morgan Stanley on American Express. Royal Caribbean got an upgrade to neutral. Then we've got United Rentals initiated to outperform from Credit Suisse. Sherwin-Williams to sector weight from overweight. We got Chipotle rated as a buy from B of A. Disney as a buy from Dava. And Wells Fargo also reiterating Goldman Sachs as an overweight, raising its price target to $420, up from $390. Domino's as a buy from B of A. JP Morgan did downgrade Hain Celestial to neutral. Microsoft as a buy from Bank of America. Alphabet as a buy from Loop. And Tesla as an overweight from Morgan Stanley. So some of the big tech here definitely getting some buy ratings. Apple, Microsoft, Alphabet, Tesla. And from an economic calendar standpoint, we do have some Fed members talking. So John Williams, Lisa Cook, we got Raphael Bostic, Neil Kashkari, Christopher Waller. So there's going to be a lot of conversations with Fed members scheduled for today. Yesterday, of course, Jerome Powell kicked us off during that David Rubenstein interview. So, this market won't quit. This market would absolutely not quit at all. We are seeing some strong momentums coming in almost every single day, despite earnings expectations lowering, and of course, the technical conditions suggesting that we are certainly a little bit on the overextended side, but the buyers are absolutely resilient. They are very stubborn, to be honest, with the markets pushing higher as much as they are. The next clear resistance on the S&P, we've talked about it, about 4,300. It's going to be at closer to 43 and something. This right here is going to be that level at 43.30. That's the next clear resistance for the S&P. That's the level that we're watching, paying attention to over here. And if we do see a bit of a pullback, if we do see, the S&P come down, the support level is going to stay put roughly in the low 4,000s. Call it 4,000. That's going to be the level because we are in a very nice higher highs and higher low pattern right now. This is the overall trend for the S&P. So if you do come down, this right here would be that next support sitting at 4,000 points. That's the S&P level for us to watch. And then, of course, a resistance up to 43.30. And then until we get to that ascending triangle, then there's going to be a big move happening for the S&P 500. So very, very exciting time for the market at the moment. All right, let's just break down some earnings, shall we? Fortinet, I already broke down, but Enphase looks like it did incredibly well. But let's just quickly break down some of their numbers. So revenue came in at $724 million, up 75% year over year, beating by 21.4 million. And EPS, Q4 non-GAAP EPS came in at $1.51, beating expectations by 25 cents. So both beat on revenue and earnings per share. Free cash flow of $237 million, cash and cash equivalents and marketable securities of $1.61 billion. And for the first quarter 2023, revenue expected between $700 and $740 million, 682 consensus. And they're also including to ship about 100 to 120 megawatt hours of Enphase IQ batteries. Gross margins in the range of 40 to 43%, non-GAAP gross margins between 41 and 42%. And we got non-GAAP operating expenses in the range of 100 to 104 million. And effective tax rate around 20 to 24%. We don't have an earnings per share guidance over here. Let's just take a look at some other report over here. So let's see, Q1 guidance for 707 to 740 million. And we don't have earnings guidance on this either. But yeah, net income beating expectations, earnings beating expectations, and revenue also beating expectations, with the quarter guidance on the first quarter also beating expectations. However, still, I think 247, which is going to put us roughly at over, $34-35 billion market cap, is still a little too high in my personal opinion for Enphase, just the valuation wise, trading at over 75, 90 times earnings and over 14 times sales, 15 times sales is just a little too much, regardless of how beast of a stock Enphase really is from a growth perspective. So definitely something to, keep that in mind. So, okay. Yeah, Hustle Smart says, I don't think we can sustain this move up without some massive selling. So I think we may see a little bit of a profit taking at some point. A pullback, I think, is very normal. We've seen extreme greed. If you take a look at, the CNN Fear Greed Index, you'll notice that right now the sentiment is without a doubt to an extreme greed level. We're at 77. So it's no doubt that the consensus right now is extremely bullish, right? We've seen the markets go higher in the last 2 to 3 weeks. NASDAQ, 6 consecutive weeks of green. 6. We're talking about a month and a half of just absolute greenery. So you can see how the consensus really has shifted. There's been record amount of call buyings. And as the markets are going higher, more and more money is being deployed on the back of this idea that we may have missed the bottom and the markets are pushing back higher. But now we're getting to a level where the risk reward is really not that favorable on the long side, unfortunately. But yeah, we'll see if and when that pullback actually does happen. So anyway, Google pre-market down 4.25%. Just notice must be the ChatGPT recent announcement. So Oscar, they did release their Bard AI, but there was a news piece that pretty much suggested that Bard AI was giving out inaccurate information on a company ad. So that's been that's something that I think is really important for us to consider as well. So Andres is saying, been trying to short Nvidia for like 2 weeks and it keeps pumping. Now, yesterday somebody asked me about Nvidia, right? So let me just go over that. Okay, right here. Yeah, somebody asked me about Nvidia. They asked me, you won't buy Nvidia at this price, but will you short? That was their question. This was 12 hours ago in my market update video from yesterday. And this is what I responded to them. I said, as mentioned in the live stream, sentiment is too strong to the upside to short. I'd be trading against the trend. I don't want to get burned, and I'm happy on the sidelines on that one. And that really is, sometimes you know that this is not sustainable. Sometimes you know that the stock, for example, Nvidia in this example, is number one, overbought and overextended. Number two, overvalued considering the price of sales and price to earnings multiple. And yet you can't trade it right. Why? Because timing is a really important aspect to trading, right? Even though you know those things, the stock can keep pushing higher. And that is why shorting it in an environment where the sentiment is too bullish, sentiment is too strong, would be trading against the trend. And trading against the trend, you got to have your stop losses, your risk management super tight, because otherwise you do get burned, right? That's exactly why I mentioned that I'm not buying Nvidia at this price, but I'm also not shorting it because I know the sentiment's way too strong and I know they can still keep pushing higher. I think it can get up to over $230. That's the next resistance that I'm watching for Nvidia. But we need to wait for a confirmation, right? We need to wait for some type of confirmation, whether it's a bearish engulfing candle, whether it's a shooting star candle. Candlestick patterns can certainly help, whether it's a MACD reversal below the RSI, whether it's a negative divergence on the RSI, whether it's tapping onto that resistance at 230, something, right? Something. We need to wait for something, a confirmation, before we can appropriately trade this, right? There's a lot of different things to look for. And right now we just haven't gotten that. So it's really important to take it slow. We know that this is not sustainable. We know that the time will come where there will be an opportunity on the downside, but we just have to wait for that confirmation. Okay, let's talk a little bit about Uber. So let's see, Uber reporting pre-market, they are pushing higher, up over 7%, and it looks like they did beat on both earnings and revenue. And we did get a very strong earnings per share number from 29 cents per share from Uber. That's actually really good. So Q4 EPS came in at 29 cents per share, down from 44 cents per share same time last year. So year over year, we did see a decline, but analysts were expecting a loss of 16 cents per share. And revenue came in at 8.61 billion, up from 5.78 billion. And analysts were expecting $8.51 billion. So that is actually a very strong growth for the company on a year-over-year basis. So 8.61 divided by 5.78. We're looking at a 49% growth in revenues on a year-over-year basis. And I think part of it has to do with inflation, because just, prices for Ubers have skyrocketed, I feel like, in the last year, because cost of gas and, oil prices have also rallied quite a bit. So there's definitely a factor of that also included there. But, RSI before this gap up was 79. I can't even imagine where it would be trading at today, probably in the 85, in the 85 to 90 levels. But from a technical standpoint, it's definitely starting to break outside of his lower highs and lower low channel, kind of trading below the moving averages for the longest time, and now really starting to trade outside and back above those moving averages. But we do have a pretty big gap to fill for Uber right around here. We'll see if it actually comes down here intraday or if it continues to charge even further higher. And the next resistance actually going to be sitting exactly where the price is trading right now. It's going to be sitting roughly around here at around 38.35. We have gone rejected here a couple of times before. Previous support, previous resistance. So that's the level to watch for Uber, 38.35. All right. Like Sarah says, your mic is bigger than your face. All right, I'll just lower that for a little bit. Perfect. So, all right, so we're ready. 2 minutes for the markets to open. I'm going to switch over to the indexes. Right now, pre-market, we are selling off a little bit, but that probably is not going to stop the bulls from coming back in and kind of bidding it up, as we have already seen for the last 6 weeks for the NASDAQ here. So very, very undecided, or I should say like very indecisive poll here. 45% expecting green, with about 39% expecting red, and about 15% expecting a flat market. So Not a very not a poll where we can kind of find out a clear winner, but it's very much all over the place, and I think that's very normal considering where we're trading pre-market at the moment. Google definitely here taking a beating pre-market here, down 5%, down to low $100 again here. I really do think that Google kind of, how many of you actually feel like Google kind of rushed into this Bard AI because they were getting the pressure from ChatGPT? I feel like it wasn't ready, and I know we don't have the beta yet, but I've been kind of scrolling Twitter and I've been kind of reading some of the comments on Bard AI. It kind of feels a little bit rushed, that because they were getting a lot of pressure from ChatGPT, and ChatGPT is on its way to getting 100 million users. Can you believe that? It's only been 2 months. 100 million users, monthly active users. That's insane. That is an insane amount of first mover advantage. So I think Google definitely felt the pressure of that, and they just kind of like rushed this launch. But only time will tell, of course, which is going to be like the winner eventually, right, for AI. Anyway, we'll see if any buyers bite for Google here, down in the trenches here, $103 or so. Tesla is flat. Apple here down 67 basis points. We got Microsoft here. Wow, Microsoft did gap up. Wow. Pre-market, it wasn't pushing up. And then finally, like we looked at this 10 minutes ago, it was flat. It was in fact down 0.5%. So Microsoft did gap up 2.6%. So you're kind of seeing that, contrast here with Google selling off 4.5% and Microsoft pushing up 2.5% on this news. So my analysts praise new AI-powered Bing Edge. So Bing is coming back to life, folks. Bing is actually coming back to life. Wells Fargo analyst has an overweight rating and a $300 price target on Microsoft, noted the inclusion of technology from OpenAI in both Bing and Edge will drive market share gains for search, browser, and advertising, with the potential for further AI-enable innovation across the tech giants' products and services. There was this really interesting poll on Twitter as well from Marcus Brownlee, so MKBHD, and he pretty much had two options on that poll. One of them was, so basically the question was, what will you use, right? What will you use? The current Google search or Bing with ChatGPT? And that was a very, very split poll, and I was kind of surprised that it was split. I thought it was going to be Bing with ChatGPT, but it was kind of split. 50% said Google as it is right now, currently, and then 50% said Bing with ChatGPT. But that was actually a good takeaway that, Bing has right now, less than 2% market share for search. We can even do like a Google search here. Bing market. It has to be like in the single digits, right? So, okay, as of December 2022, online search engine Bing accounted for nearly 9%, of the global search market, while market leader Google had a share of 84%, so complete dominance on search without a doubt. But the problem with that is obviously, it's not so much climbing the mountain, but it's obviously staying at the top of the mountain is what's more difficult, because for Bing, they're already working with 9%, right? The only way they can go is up. For Google, they already have 84%. The only place that they can go is potentially down if they don't adapt. So it's going to be an interesting battle for sure. But man, I can't even imagine a world where people shift from Google to Bing. Like, that would be crazy. Yep. So Sandy says, don't forget, Google uses Chrome, and Microsoft doesn't have a browser. I thought Edge was Microsoft's browser, wasn't it? Like, isn't Microsoft Edge their own browser? I know Bing is just a search engine, but I thought Edge was like who owns Edge? So Melissa says, my college switched. That is Edge is Chrome. Interesting. Really? Nah, I don't think Edge is Chrome. Is it really? I could be wrong. I don't know. But I use Google. I actually use Safari, so I'm not even in the race right now for those for Google Chrome versus Edge versus Bing or whatever. But obviously the search is Google here. Edge is Microsoft. Yeah, that's what I thought. Edge. Okay, Edge is Microsoft, right? Yeah, that's what I thought. So yeah, okay, so that's what I thought. Edge is Microsoft. So maybe they will enable Edge with um, Chat GPT and of course with Bing search. Tough time. Google definitely has a tough battle in front of it because, as I said earlier, it's not like a small company coming up against Google that they can easily scoop up in an acquisition and they can kind of throw $20 billion and buy their tech. It is a giant. It is a Microsoft, so it is very interesting. I think same link up's going to happen between Meta and Apple, as it is happening with Microsoft and Google. And of course, Amazon's also in the background with AWS. So cloud battles going to be completely separate. So it is it's going to be interesting. Milan says Edge is garbage. No doubt it is. I don't even remember the last time I used Edge. Don't even have that. Yeah, Safari is not a search engine. I know. You're just talking about browsers. Which browser do you use? So I mentioned Safari as a browser. Of course, I still use Google Search. For now, we'll see if Bing has what it takes to flip over. But right now, man, Google down 6%, Microsoft's up 3%. Just a complete flip right now happening. Really, I mean, investors just kind of flowing out of Google and flowing into Microsoft right now. It's kind of like one of those situations that has happened between like Intel, AMD, Nvidia, and we've seen it like literally point blank. Intel reports earnings, it dropped 6%. AMD, Nvidia rally after hours, even though they haven't reported earnings or anything. You can just see the money's coming out of Intel and it's going into AMD and Nvidia. And right now, that's I think what's happening for the most part today. Money's literally coming out of Google today and it's flowing into Microsoft on this catalyst. Tesla's flat. Apple's still trying to push higher and stay green, but Nasdaq's lower, 40 basis points. S&P and the Dow also a little bit lower here. So the Leaf says all big companies prefer Edge because of the safety feature and seamless enabling with Azure. So that's a good point. And again, if anybody has experience, if anybody's working for a company that uses Edge, feel free to chime in. But I'm assuming that's only for companies that are on the Azure cloud system. Like what if they're using AWS or what if they're using Google Cloud? Then I doubt they're going to be using Edge. And when it comes to, I think, security and safety, I think there can be a case made for pretty much both companies that have pretty substantial amount of, safety and security there, right? So I think Google doesn't have any, Google doesn't compromise any data anyway. Of course, I mean, they advertise, but so Alex says Google still is going to win long term. Don't see people switching to Bing. We'll see. I mean, all right, let's just do a quick search, a quick poll. Why don't we, huh? Why don't we do a poll of ourselves? What should be the question though? Like, it's kind of hard to kind of put the question on because, okay, could you see yourself switching over to Bing with Bing from, could you see yourself switching over from Google to Bing? Let's just do that, okay? And this is under the assumption that we are already with ChatGPT and Bard AI. Both of them are integrated. So I'm just going to do a yes or no question, right? Could you see yourself switching over from Google to Bing? Should be more specific. Search. And if you already use Bing search, then you're definitely, you can just put down yes. Yeah, maybe an option should be there. Maybe definitely, I agree. So let's just see. Could you see yourself switching over from Google search to Bing search? So we'll do yes, no, and then maybe. All right, let's do it. Let's see what the people have to say. So C just says, I don't use either right now, so I could switch. What do you use? I'm actually curious. What search engine do you use if you're not using Google or Bing? What else is out there? Tesla now green, 198. We probably might get a retest up to 199 here. Okay, so Uber, lots of sellers stepping in. So we're now starting to see that gap fill in, which we marked before the open. So I'm going to close that down a little bit. Let's just check in on Enphase here. Enphase, wow. Enphase giving up on all of its gains here. Red candle, that's brutal. 247. That's a drop of 7%. Still green, but a red candle coming in. Could be a gap fill. But we'll see. I mean, it definitely came down all the way down to fill this gap. We'll see if the buyers step in now. But this is a brutal drop for Enphase at the moment. Chipotle here, still down 4%. And then finally, the company that's gotten away a little bit is 11.7% green. Fortinet still kind of battling through that resistance at $63. So this is a pre-market resistance. We got up to that level, and then we're just consolidating sideways, struggling to break out above that level right now. Netscape, interesting. So James says, once they market Bing with ChatGPT, like you want to know something, and Bing, it's done, Microsoft will take a huge chunk of Google. Fair point. So Google ecosystem is just too good. That's also true. I mean, you know, when you compare Gmail, obviously a lot of other services and products that Google has to offer, the ecosystem itself will, I think, be strong enough. But there's no doubt, I think in my mind, that this definitely puts Google in a very vulnerable situation, right? I think we can all agree that yes, majority of it, let's say 84% right now is a search engine market share. Maybe that takes down to 80%. Maybe it takes down to 78%. But I think the ecosystem as a whole over the long term is, probability-wise, it's going to be fine because it's very, very strong. It's very compelling, and it's just, there's a lot of other things. There's a lot of other parts of Google than just search. Of course, it's majority of it. That's where people use it the most, but there's a lot of other things to add on as well. But I have no doubt in my mind that if they execute well, if Microsoft executes this well, they can actually take a lot of market share away from Google. Oscar says, what if both flourish? It's possible for them to coexist. There's no doubt. They can coexist and they can flourish. Actually, they can coexist, but I don't know if they can flourish. You know, because the reason is Google's revenue will definitely get hit if we see a pullback in the market share for search, right? Advertising revenue will come down because, you know, if you come over to, let's see, Google's earnings, right? So if you come over to the latest earnings call, which is Q4, no, this is third quarter. Let's just come down here. All right here. So we're going to go over to 2022 Q4 press release. So, okay, we're going to come down to segment revenues, right here. So Google search and other, right, for 2022. This is just for the quarter, just for one quarter, $42 billion, right? $42 billion. If you look at their total revenue, $76 billion, what is that percentage-wise? 42 divided by 76, that's 55%, right? Just like Apple is dependent on iPhones for 55% of its revenue, exactly how Google is dependent on search for 55% of its revenue, right? So again, let's just take for the full year. I don't know if they have the full year revenue broken down by segment. This is still for the quarter. Operating income. Okay, so this is operating income, $67 billion. And yeah, even if you take a look at their operating income, $21 billion. In fact, operating income-wise, Google's services was $21 billion. And then when it comes to revenues, $67 billion here. This is for... yeah, 2022. They don't have it for the full year listed, broken down by different segments, not that I can find right now. But the bottom line is a lot of revenue driven by Google search. So YouTube, again, if you come over to YouTube over here, you'll notice that YouTube is only $8 billion, you know, for the quarter. So when you mention Google is YouTube, not so much. Yes, it is a substantial part of their business, but it's only 10%. You know, if you take a look at their total revenue, $76 billion, they only made $8 billion off of YouTube. So 8 billion divided by 76, it's roughly about 11, maybe 10.5, 11%. So people do think that YouTube is pretty substantial, but in the grand scheme of things, the way Google actually makes money, it is only 10.5 to 11%. It's actually only 1/10 of their business. Google search is a pretty big deal, and Microsoft is definitely going after the big whale here, big market. Okay, so polls are in. Let's just talk about 67% saying no. Okay, so that's good. But 17% still saying yes, and 16% saying maybe. So, if you combine those two numbers, we're looking at least 30%, 30 to 33%. So like a third of people would consider either completely switching over, will definitely think about it, consider it maybe. But 67% are kind of staying put. And that's what we're here to discuss, is that, look, I think the ecosystem is protected. It's not going to be vulnerable to those things. We'll talk about Tesla in just a minute, but it is possible that Microsoft does chip away a little bit of that market share, which may or may not affect that revenue number for Google. But anyway, let's just switch gears. Let's talk about something other than Microsoft and Google. Tesla is on the radar here. We're seeing Tesla kind of come back up to 199, high for the day. Look at that, exactly to the T at $200 on the decimal, literally perfect number, coming up to that resistance and then pulling right back. But we'll see if Tesla can break out over $200 today. We're really watching 201.56, so this right here is going to be that big level to watch for Tesla. And man, oh man, it has just been on this insane rally. So, okay, Disney resistance 116. So let's see. Ooh, Tesla just broke past 200 here. So Disney right now, we've got, yes, so 116, that's the 300 SMA. That's what we're watching. And oof, the RSI just really, everything just really has pushed up. I'm actually planning to do a video on if there's any companies or stocks out there that are currently, good deals, because the market right now, with the way that everything's moved up, and how high we've pushed up, like for some stocks 40, 50, 60, 70%, 80%, the filter for good stocks is definitely narrowing right now, because we don't have a lot of options, unfortunately, for companies that are trading at reasonable to fair valuations, trading at oversold conditions or conditions that might suggest good risk reward favorable ratios. Unfortunately, everything has just moved up. Tesla almost at $201. We're up 2%. A very strong rally coming in here. Mexico president says 2 locations primed for new Tesla plant. Tesla has a new master plan coming out on March 1st. Elon Musk to unveil Tesla's master plan 3 at its first investor day. So March 1st. There's going to be a, quote, master plan coming out. Master Plan 3, the path to a fully sustainable energy future for Earth, will be presented on March 1st. That's incredible. Incredible. That is a tweet that apparently was just released about a few minutes ago, but should definitely catapult. Wow, look at Tesla go. $201 here. Oil moving back up in, good for CPI next week. Yeah, so CPI for next week, Kevin, that's true. I mean, oil pushing higher is not going to be good, but CPI for next week is going to be for the month of January. So whatever happens in February, obviously is not going to get affected until we get that report in March. But right now, as it stands in the month of January, oil prices were lower, 1.77%. So we're expecting some good numbers from the CPI print that comes out next week for the month of January. So, and for the month of February, only down 1%. This has happened like literally 4 months in a row. You see these long wicks? These are so frustrating. Every time oil comes down to low 70s, it almost always gets bought up. Every time. Every time. There's just a lot of support sitting at those prices. It's just been consolidating sideways at that level. High for the day for Tesla, 202.45. So it looks like the markets are really charging higher here. Except for Google. Google's not having a great day. Down 6%. Nvidia up 3%, 228, so getting up to $230 resistance. Microsoft 2.8%. Tesla's up another 2.3%. AMD's up 2%. Netflix up 30 basis points. Apple, Amazon, and then Meta struggling a little bit, and Google absolutely getting hurt. Vertex down. They reported earnings. By the way, let's just quickly go over to Vertex. Vertex we haven't discussed. But yeah, look at this. Coming right back down from that resistance of 324, down 8.8% already. But let's see. So revenue for the quarter was 2.3 billion. It's up from 2.07 billion. Analysts were expecting the same numbers. So they matched expectations. And then the EPS came in at a $3.76 per share, up from 302. Analysts were expecting 351. So that growth is actually pretty good. 24.5%, not bad. And for the full year 2023, the company is expecting revenues of $9.5 to $9.7 billion. If you take that mid guidance of 9.6, price to sales, we're trading at about 8 times, a little bit under 8 times sales for the company. And if I take a margin of about 38%, 9.6 times 38, that's $3.6 billion divided by 3.68, 20.6 times forward earnings, which not bad. Not bad, if you ask me. 20.4. It's okay. I mean, they just grew earnings by 24.5%, and they're trading at 20 times forward earnings multiple. PEG ratio is certainly below 1. So I'll definitely do like a updated analysis on Vertex. And you know, the fact that it's coming down is good. RSI is coming down, MACD is coming down. Maybe this is a stock that can be considered as a good freaking deal right now. The fact that it's selling off quite a bit. So your old price target for Tesla is back. Yeah, coming up to $202, $201 per share. So Lauren says only bad stocks are good deals now. That's true. That's a very good point. But again, we'll see if you can find any good stocks trading at a good price, good valuation. That's the real name of the game, right? Trying to find something where the market's doing a little bit of mispricing, where the stock might be disconnected, the price might be disconnected from its true value. By the way, I shared our secret strategy for all the members in our Discord today. So if you are in our Discord, go to one of the channels where I tagged everybody in, and I posted our secret strategy for buying stocks. This is something that I encourage everyone to do every single time you buy a stock. Every single time, that's something that you have to do. It's our secret strategy. And for everyone who's in our Discord, you probably know exactly what I'm talking about, but highly encourage you guys to check that out. It definitely made my day. It was funny. Super funny. But yeah, so this right here, again, is our entire chart so far. Bitcoin, Ethereum still leading the way, up 37%, followed by tech, up 16%. QQQ's up almost 16%. We got comm services, discretionary, mining ETF, everything's up double digits. SPY is up 7.5%, biotech's up 7.5%. Real estate, crude oil is up 6.3%. The things that are selling off right now, staples and utilities, definitely struggling. Silver prices are down 6%. Volatility is down 14%. The dollar index, healthcare, 10-year yields, and gold slightly flat on the year. But this has been definitely a very risk-on environment for the markets overall. Yeah, friend referral coupon. Qs are in a free fall right now. They are definitely selling off quite a bit. On the back of Microsoft here, cooling off. We got Apple also selling off a little bit, and Tesla here back under $202, $201 per share here. Still up, but definitely pulling back here right now. And Google is still struggling quite a bit. And Enphase, don't tell me Enphase is actually red. Wow. Look at that red candle for Enphase. Oh, 2.5% red. intraday since the open, this stock has sold off 10%. 10% in less than 24 minutes on about 3.5 million shares. Incredible. So not only did it fill the entire gap, it really gave up on all the profits there. Jonah says, where do you find the secret strategy in which channel? It is going to be, you know what? Let me just send over the link. Let me just send over the link. It is definitely a very funny video for me to share with everyone. So, yeah, it's in the meme channel if you were there. But I'm going to share the link here anyway. There it is. If you're interested in checking that out. Anyway, let's see. So bought Google 104 weekly puts at the close yesterday on that I hype, but this is probably temporarily pull back on QQQs. That's good to know. Your puts are probably printing really nicely. What do I think about BND? So Vanguard Total Bond Market ETF. It's got a good dividend yield, 2.5%, decent volume. So I would be interested, again, at that same price levels as we have already talked about for TLT. So it's almost an identical price chart. I'm watching $98, $99 for TLT, all the way as low as $91. So for BND, you can keep a close eye at around $71. That's going to be this right here, down to as low as 68. So those right there are going to be some levels to watch for BND. And I do like Vanguard. Vanguard's a phenomenal ETF index provider, very, very low cost. And of course, the bond market, eventually, I do expect as rates come down, it's going to start to push back up. Yeah, Sanjay says profit taking on Enphase, no doubt. Definitely we're seeing a lot of profit taking there. But yeah, NASDAQ here starting to really roll over. Ooh, Microsoft also starting to dive down. Tesla still validating that middle VWAP and the 9 EMA, so we'll see if it continues to stay above that level or breaks down below 200. Right now we're like 200 on the dot. So anyway, thank you so much for joining in, everyone. I really appreciate it. This is going to be it for today. Make sure that you drop a like. Right now we're doing really low on likes. Come on, guys. We're like 400 plus people watching, only 93 likes. We can definitely get this up to at least 200. All you have to do is just literally tap that like button. I would really appreciate that. And so yeah, thank you so much. Make sure that you drop a like, subscribe, hit that notification bell if you don't want to miss out on any future live streams and updates and videos. And link to our Discord is going to be down below if you're interested in joining us. And hope you all have a fantastic day. For later this week, we don't have a lot of stuff, but next week is going to be super important because we do have, of course, our very own inflation numbers coming out on Valentine's Day. So you can't miss that. You absolutely cannot miss that. It's the market's way of telling you how much the market loves you, because again, it's gonna be very, very good. And I can't promise the market's gonna be generous to us, but I can promise it's gonna be entertaining. So thank you so much. As always, happy investing. I'll see you all.